I'm Kent with VictorEric Design+Build, and welcome to our Multiplex Shaping Vancouver series, where we're inviting industry experts to share their insights and tips on multiplexes in Vancouver and the Gentle Density Initiative. Today we have RyanTam joining us, who is a mortgage broker with Finio. Hey, so I'm sitting here with RyanTam. Welcome. Do you mind introducing yourself?
Yeah, absolutely. I'm RyanTam. I work in commercial real estate financing, working with developers, investors, mostly in the commercial real estate space, get the right financing for their capital requirements. Yeah.
Awesome. Well, excited to have you here. Can you tell me a little bit about how you got into project financing specifically?
Yeah, well, we were talking about it before we started, and I kind of took the long way around. It wasn't a direct path to where I am. I started with HSBC as a commercial banker and spent about 10 years with them on that. And in that time, I was doing lending for companies in the $25 to $250 million range. So that included working capital financing, project financing, equipment finance, trade facility, all that kind of stuff you need as an operating business, but also construction financing for, say, industrial warehouses and such. And oftentimes my clients would also be investing in commercial real estate.
Okay.
So then we help them with acquiring those properties, so income producing property financing as well. So did that for about close to a decade, left, got into private industry with the aviation company. I co-founded with a business partner, and I worked in that for 2 years, and it was like a bit of a wild ride, totally different industry. Really fun though. And then eventually I got out of that, so my interest in that company, and then got into real estate investing. You know, initially outside of Canada, I had a friend in the US that was in the Midwest, and they had a decent sized property management company. So we started out with like simple stuff, fix and flips. I got into industrial projects, then single family home development, some land plays as well. And then built up sophistication and experience for that. And then eventually came back to Vancouver. So in Vancouver, started looking around for projects, but talking to people about my projects in the US, doing financing for some of the people that was asking me about it as well. And I just said, probably should get registered as a mortgage broker officially, and be in this as a line of business for myself, essentially. So yeah, I hang my license with Finio. They're a brokerage out of Toronto, does deals across North America, tech and data focused. So it's been good, and that's pretty much it. That's how I got here.
Cool. So did you have much experience doing residential financing?
Residential financing, not really actually. The residential world is kind of separate from the commercial world. The residential world is built to serve a large volume of transactions, and there's systems built into that with direct, broker channels with different lenders. But in the commercial world, it's much more opaque, let's say.
Okay.
Because on the residential side, it's a method of collecting documents, going through what the borrower needs for their own kind of housing requirements. And it's just a different beast compared to, okay, I'm looking at an investment property, these things need to happen. So there's no easy checkbox exercise for commercial lending. And you just end up with this ecosystem where you have to know the different players in the different areas. And that's kind of why my knowledge tends to be.
Okay, so that's really interesting to have that commercial perspective. So when we're looking at multiplex, and obviously, compared to a single family house, we have more units on the site. How does that compare to commercial lending?
Yeah, the financing for residential versus commercial for multiplex is an interesting one, because it kind of straddles this line that defines what commercial real estate is. Typically accepted as 5 units and above. That's kind of how CMHC, which is same CMHC for residential properties, they also do commercial properties.
Okay.
That's kind of how they define it as well. So conceivably, you actually could do up to 4 units with residential financing. it's not standard, like I'm going to go buy a house, get a mortgage, that kind of financing. It's construction financing. And likely not everyone will qualify for something like that. And then there's also the consideration that most banks want to lend you the money to do the construction so that you'll have a long-term mortgage with them as well.
Right.
So if you say, hey, I'm just going to build these 4 and sell it, they might not be as interested. But on the commercial side, it's different. They look at it project by project. It's a business to them, and they evaluate it under that criteria. And they can even look at, depending on and we're going to get a little complicated here, but depending on the type of lender you're talking to, they could do those 4-unit kind of deals, but a lot of them will do the 5+ as well.
Okay, that's super interesting. So if you're an individual, you're a landowner, you have land, you want to develop a multiplex, it's different from a lending perspective or borrowing perspective for that person if you are going to keep some of the units versus sell them all off.
Yeah, and I mean, when it comes to the financing of the build, perhaps, yes, that introduces a little more gray area, because now you can say if you're building 4 or less, I could tell a residential lender, a residential bank perhaps, that, hey, I'm going to live in it, and maybe they'll have more appetite afterwards to do that versus just, hey, I'm building it and selling them all. So it's one of those gray areas. It doesn't fit a box nice and cleanly, but I'm sure we'll in about 12 months.
Yeah, well, exactly. This is a new initiative, and in the city of Vancouver, we've only been this is new. They've only been accepting applications since October.
Yeah.
So none have actually been built yet.
Yeah.
And I guess people are sorting out their financing like now for the early ones.
Yeah.
I'm curious about that and your views on it. What are your views on the Multiplex initiative?
I mean, I think the Multiplex is a step in the right direction. Until it's built out and fully operational, we won't know the full impacts, of course, but we need density, we need more housing in the city. It's one way, certainly, to create that. Is it the most efficient? Is it the end-all, be-all? I don't think so. I think we're going to see perhaps infrastructure bottlenecks. And I'm not sure it's fully evident what kind of product needs to be built exactly where yet. The community perhaps doesn't sense that, and so we'll have to see how it all plays out.
Nice. So going back to that, first time or small scale developer perspective, do you have any tips for that person who's looking to start one of these projects and needs financing for the build?
Yeah, I'd say if you're like a junior developer, your first couple projects, the team is really important. Like the team you put around you, because a lender always, they're gonna want to understand, is this person able to actually execute, right? So if you're, let's call a junior developer, you want to make sure your architect is really familiar with this. You want to make sure your GC has done similar type of products. You want to make sure your budget's tight. Maybe you want to get a cost consultant on something like that. And then when you go present yourself as a team to the lender, it looks much stronger. So that'd be my advice for that.
So the lender's actually taking into account like the resume or the experiences of people involved in the project. Yeah,
absolutely. I mean, if you had to lend money personally, you want to make sure the person who's borrowing it, can actually execute, right?
Well, sometimes I'm surprised that it's more than just a spreadsheet they're looking at. They're really looking at someone's background and track record.
Yeah, for sure. Character is important in lending.
And how about timeline? How much time should a borrower, allot to actually getting one of these loans?
That's an interesting question because I think timeline is still not clear with the city. So I've heard that development permits are still about 3 months out right now if you just submit one today, and then building permits perhaps hopefully another 3 months out. So, but that's not clear yet, 100% clear. They're still working through it. It's still first year. So I think when you understand that, I can provide a more kind of clear answer on the financing. But generally, when it comes to this type of financing, you want to say, okay, 3 months before we actually start putting shovels in the ground, let's have a good sense of where we are with the numbers.
So you're talking about lenders looking for an experienced team, someone like VictorEric with development experience, design experience, build experience, someone like that. Is that correct?
Yeah, absolutely. I think the lender would be happy to see VictorEric on the team there to make sure that the project gets executed.
Okay, that's great. So can you talk a little bit more from the borrower's perspective? What kind of timelines are they looking at to get approved for this type of build financing?
Yeah. I mean, the biggest factor here is like the city approval timelines. So
Mhm.
6 to 8 months is kind of what we're seeing for approvals, DPs, BPs, and such. And I generally say like 3 months before you're ready to break ground, you want to have a good understanding of where you're at for financing. So that 3 to 4 month mark, start having conversations with lenders, brokers, and just get a good understanding.
Okay, so if someone's, say, looking for land right now to do one of these projects, is it possible for them to get pre-approved?
Interesting question. I'd say depends on what your strategy is. Okay. So if your plan is to say you're not developing many of these, you're an investor, but you want to build a few multiplexes, maybe, and you have the flexibility, maybe you want to do a primary residence move or you acquired under primary residence. If you have that flexibility to kind of move every few years, that's great for tax planning as well. And then through that channel, you can maybe get a more conventional mortgage, a residential mortgage that does have pre-approvals.
Okay.
If you're doing this as a business though, and it's you're planning on acquiring multiple, you want to go the commercial route, and the way to do it with commercial, in terms of pre-approval, is actually on the contract when you're negotiating with the seller, is to make sure that you have enough time. It's a subject that you get financing in order first. Because on the commercial side, they're not really going to give you pre-approval. They're not going to be like, hey, you can do this. There is a caveat in the sense that unless you have a lot of assets, right? If you have a lot of assets, it's not even necessarily pre-approval, but you can talk to your lender and they'll likely give you an idea. Yeah, we could do, we can lend X against your assets. And then that gives you confidence to go buy. But aside from that, if you're looking at individual properties, individual projects, and you want to look at it siloed, I'd say, yeah, just make sure you have it in your contract that you have enough time to get that financing condition in place.
Okay, so for someone in that situation, like on the commercial side, it's the lender's looking at this project by project.
Mm-hmm. That's right. Yeah, that's the interesting thing about the commercial side that maybe a lot of people in the audience aren't aware of, is that when you're talking about residential financing, residential mortgages, it's about your income level. Can you debt service this property, right?
Mm-hmm.
On the commercial side, it's about can you deliver on the property? Do you have enough equity in this project? Do you have enough experience in this project?
Mm-hmm.
And not necessarily your personal income. They'll still ask for a personal guarantee. They'll still want to be comfortable with your personal financial situation,
mm-hmm.
but it's not, you can't personally debt service, so no, you can't borrow. It's a different way of looking at it.
That makes sense. So I've heard in this scenario that people would borrow on the land first and then go and borrow for a construction loan.
Yeah.
Could that strategy work for Multiplex?
It could. I'd say it's a slim chance just because of the economics of Multiplex. Historically, when land values, there was appreciation going on in the strong market, that was a viable strategy because your land was appreciating and your carry costs, especially back a few years ago when we were talking about super low interest rates, it was almost free to hold that piece of land. Now interest rates are much higher. Your carrying costs are a lot higher. So, the economics of it just make it difficult. And frankly speaking, I don't see too many people employing that strategy right now in the market to go get a land loan. A, because banks aren't even lending that much money on land. And B, it's just not, it's not good for your bottom line.
That's interesting, and actually what we've been seeing lately, and this is more on the residential side, from our webinars and YouTube, a lot of folks have been coming forward. They have the land. Mm-hmm. They have a house, they're living in it now. And I'm really curious about that situation because people in that scenario, they're interested in generational living, they're interested in age in place. And I'm curious what tips you might have for someone who's looking to develop one of these projects, mm-hmm. who already lives in the house.
Mm-hmm. Yeah, that's an interesting proposition, and it's actually something that I'm quite involved with. I have another group that I'm part of called Build Better Group, and we help homeowners basically offer a turnkey solution and help them put multiplex on their own property and do multi-generational living, et cetera, et cetera. So when it comes to that situation, I think it makes a lot of sense. You know, a lot of homeowners out there are very familiar with their neighborhood. They like living there. And then of course, if they have kids or relatives that are having trouble buying back into Vancouver, wherever it may be, that's a way where you can achieve a bit of discount against market purely because you're creating value by redeveloping it, but be able to hand that off to whoever needs it.
Okay, that's super interesting, and maybe this is a good time to ask you. Like, I'm really curious if folks are in that situation, they're interested in borrowing in that scenario. Like, how can they find you?
Yeah, well, my email's ryan@ryantam.ca.
Okay.
You can also go to the Videotech website,
Yep.
and you'll find my contact there on the team page. And I have a website for my own little, things I like to do. Talks a bit about my business, ryantam.ca. So you can always find me there or on LinkedIn.
Okay.
Yeah.
Cool. Well, Ryan, awesome to have you on. I really appreciate your time today. But before I leave this, any other tips, any other things that you want to share?
Yeah, I'd say one of the things is, if you are interested in it, if this is a family venture, let's call it, think about tax planning ahead of time.
Okay.
Think about how you're going to transfer your assets in the most tax efficient way, because you're talking about big dollars here.
Yeah, cool. It could be a huge project depending on your experience and where you're starting from.
Yeah, it's been fun.
Cool. Well, thanks a lot, Ryan. Thanks for coming on.
Thank you.
I really hope you enjoyed the interview with RyanTam as much as I did. If you're looking for financing or a mortgage, you can find his contact information in the description below. Definitely check out our YouTube channel for more great tips. And make sure you're subscribed because we'll be bringing on lots more experts just like Ryan in our Multiplex Shaping Vancouver series. We are VictorEric Design+Build, and we create amazing spaces.